Now, I'm really excited to introduce the opening grand keynote speakers. These are two of my heroes, one from the days I was growing up in India and another from my early days in Silicon Valley, where I arrived 25 years ago. Ratan Tata was the chairman of Tata Sons, the holding company of the Tata Group, from 1991 till his retirement in 2012. Kanwal was the first Silicon Valley Indo-American founder and CEO to take a venture-backed company public. He co-founded and led TiE to a global organization it is right now. Everyone knows these two luminaries, so without any further ado, let me hand over to the prominent Indian journalist, news anchor, and the managing editor of CNBC TV18, Shereen Bhan, who will moderate the conversation with Ratan Tata first and then with Kanwal Rekhi. Over to you, Shereen.
Well, it is my absolute privilege and pleasure to speak with a man that I've had the opportunity to speak with a few times in the past. Mr. Tata, it's always a pleasure. Many thanks for joining us here at TiEcon. Just on the kind of bets that you're making, as well as the fact that you've learned perhaps things very differently today, being in the shoes of a small entrepreneur, as you put it. What's been the biggest learning as an investor working with over 20 plus startups? And what kind of risks, what kind of bets are you now willing to make with this changed landscape of a post-COVID world?
Well, when I was initially interested in entrepreneurship, it was always the same kind of excitement. If somebody said they could do something which otherwise was not possible, I was the one in Tata's usually that was urging that we do this. So I was, while in Tata's, involved in the Bay Area and in some of the early computer startups, some of the software startups, and those were exciting companies for me. I was in Tata, so I was not doing anything myself. I was doing it in the name of Tata. Now I have, if you might, another kind of responsibility to be advising people. And what I have found was that what mattered the most was how you interacted with, or what interaction you had with the founders. A founder that you spoke to and you heard about, who was looking at selling out to a large manufacturer, a large company, was probably not the person that you wanted to associate with, because he was going to cash out whenever he could. And it may help him, but it may not be the right thing for the investors that invested in his company. But there is also the other thing is you would look at companies, you look at the founders of the company, and you'd find in some cases a genuine urge to make this the market leader or the entrepreneur that was making one proud, against someone who was just looking at cashing out. And we won't mention names, but there were companies that I thought would crash instantly and nobody would put their money behind it, and that small entrepreneur worked wonders with his company and had great success, and there were others that failed. So, to me, the relationship you establish with the founder, the truth and faith that you put on the table or he puts on the table, would be the difference between a flashy entrepreneur who is either trying to copy another company that's been successful or that has a dream that doesn't come true. That's the difference.
But Mr. Tata, you raised a couple of interesting issues there in your comments. One is the risk-taking ability of people like yourselves, people who've run conglomerates who are today at a point in their lives where they can encourage and nurture the startup ecosystem. And there's been a lot of emphasis on trying to unlock domestic pools of capital, but it's been a slow start and it continues to, while it's gathering momentum, not at the pace that's required. What do you think it will need to ensure that that actually becomes a reality? And secondly, what's the role that you see for the government to play in order for us to be able to push the innovation agenda further?
Well, that's a great question. First of all, in days gone by, entrepreneurship had no place in the Indian economy because you either had a bankable project, or you didn't. And there was not that middle ground of risk capital by entrepreneurs, which we now have. It's relatively small, but we still have it. And that's a great change, and that's what you've seen. But we need to recognize that what we're looking at is foreign money. We're looking at investors overseas who are looking at our entrepreneurship, the entrepreneurs, the founders, and put their money behind those small companies with a magnitude that you can't find somebody playing in India, which is unfortunate because we're really putting our money behind foreign-owned projects, which in a way I'm glad we have, because we have entrepreneurship and startups because of this. But if we had a bigger play, and if large enterprises were to put large amounts of their money into projects, we would get an interesting play in terms of what to do. That's also, as you can see, starting to happen. You can see players looking at this, others following. You asked an important question: what role should government play?
Mm-hmm.
The government can play a very important role in furthering technology, which as yet the private sector cannot do. Cannot do because it's big money, it's high risk. But if you look at some of the most interesting startup companies or startup activities, they've been from people who have used government money to institute an activity. That investment would never have happened without that government input. Let me expand that. I'd like to take an organization like DARPA, which is the US government's development agency. DARPA has put billions of dollars into integrated circuits, medical electronics, life sciences, that no one would, not no one, but very few people would put their money into, because it would be a long drawn out thing and it may not work. But if you look back on it, there are enormously impressive areas which have been funded by DARPA, with seemingly no future. But because of DARPA's investment, those companies have had the funds, and DARPA has had the insight to enable those industries to take form. So without the entrepreneur that we have, it's funded on outside money, and without companies, government companies like DARPA, the scene would have been quite different.
Yes, that is a valid example, but you know, the government has got the Startup India Fund and so on and so forth. But you know, I want to steer the conversation away from the government to the role of the private sector in nurturing the Indian startup ecosystem. What role do you believe large conglomerates like the Tatas, etc., can play? Because one of the aspects that you just brought up was that, you know, startups are much more agile, much more nimble, perhaps in many ways more disruptive than legacy businesses. So we are now starting to see conglomerates acquire startups. We're starting to see partnerships and collaboration. How do you see that playing out?
Well, I think the plays are the same. Who looks at it as a question of what kind of vision one has. But there could be two kinds of roles that we're talking about. One is an area where I am now putting myself back into the industrial entity that there was. I've got disposable funds. I'm going to start investing in startups, which I will control and I will own, and I will provide myself with activities which I would otherwise not get into. And I could do this by setting up family offices, by creating small venture capital based companies, where you can argue that I'm using my shareholders' money, but I'm providing them the opportunity of being in this activity. That's different from what you've seen in the Bay Area time and time again. I put all my money into this. I borrowed money from investors and friends. I have a responsibility to see this become a reality, and I'm going to give it all my best to make this happen. That segment of the enterprise has been the one that I've been most impressed by. Usually a bunch of ex-students who have had a common view of something that could happen. A company like Google that's been established, where two colleagues in college could decide that they're going to start a search engine, then you look behind the vision and the entrepreneurial spirit that there is, and you have to say, wow, that's something that's very impressive to look at, for someone to put their money into, and to become a part of their life. But look what it's done. So it's so exciting, an area that I find it difficult to put words behind it. But when you look at a deck of investable options, and you look at some of the propositions that are made, a lot of them are copies of successful startups, and those are, unless there's a jewel somewhere, those are probably not going to be successful, or maybe would become Me Too companies, that would be all. But the one which has the greatest vision and a spark that explains how he's going to get to that goal, which you don't find that with everyone. Those are the jewels that one looks for, that creates the enterprises that you and I are referring to just now.
You talked about how Google had the wow factor. You're probably looking at a bunch of decks and investable opportunities on a daily basis, Mr. Tata. What has wowed you, or what wows you today as you look at opportunities? Which are the sectors that you feel that you must back? Because you also said that this is an opportunity that that people must capitalize on, and you can stretch the envelope to as much as you want. So where do you believe the constraints lie? What is wowing you today? How are you looking at the investment landscape?
There's no pro forma that tells you that if you go down this checklist that you're going to be backing a winning company. One may be in healthcare, one may be in life science. You may have 4 or 5 in electronics. You can have unbelievable connections between, let's say, electronics and life sciences, or nanotechnology, or these are actually areas of enterprise that have come from these new areas of business, and are going to continue to be exciting areas. And some of them, unfortunately, you get terribly excited about as something that can happen, let's say, almost like science fiction movies. You can see that this really could be so. You could have a telephone conversation with another person in another language and speak as though it's the same language that you're talking in interacting with a person in real time in a very different way. And it may seem, again, that this would be terrific, but it doesn't work, or it doesn't work with these founders. It's all a question of the people behind, the brains behind the enterprise you're looking at. And in my view, the link that you have to the investor is, do you give that investor the chance to play out that role model that he wants to? Or are you going to constrain and try to second guess him as you go along? Both have their pluses and both have their minuses. But the entrepreneur who enjoys the trust and the confidence and the excitement in a new venture is going to be more successful, or should be more successful, than the other one who's trying to use his vast knowledge and his risk awareness also to control the enterprise is going to have.
Mr. Tata, I want to go back to your role as an investor. How much time do you spend with, with the founders that you've decided to back? What is the equation? What is the relationship like? What's the learning that you take away? What's the value that you believe you've been able to add?
Well, first of all, I have to say that I have not been as successful in giving them the time that many of them seek. There are some who, there's an informality first that they can walk into my office or fix a time to meet, and I'll give them that time, but I'm not there all the time that one would like to be there from my side. And much of it depends on the human interaction between the founder who promises a lot and doesn't do that much, and the founder who really is bringing freshness to the business that he's looking at. I think if one cannot make that differential between what's really exciting and what is said to be exciting, then you miss the boat, if you might.
So, Mr. Tata, always a pleasure. Many thanks for joining us here. We wish you the very best of luck, and we hope that you continue to drive change and make impact. Appreciate your time.
Thank you, Shereen. Thank you. Nice to be with you again.
It was very nice to see you. Hopefully, I will be able to see you in person soon.
Okay. Thanks.
Thank you, sir. Take care.
Okay.
Well, you just heard there from Ratan Tata, a man who has been able to drive things at one of India's largest and most diversified conglomerates. But now it's time for us to turn to Kanwal Rekhi, a man that all of you at TiE know very, very well. So I'm not going to go down into the introductions at all. Mr. Rekhi, it's always a pleasure to speak with you. And I always appreciate the fact that you're a straight talker and candid in your thoughts. Before I talk to you about what you make of the scene here in India, I want to talk to you about what you observe that's happening in the valley from your perch, especially in the context of what the pandemic has done to the world, the kind of disruptions that we're seeing. What is the valley up to today?
So, the entrepreneurship, this valley is known for entrepreneurship, and the pace was very, very fast before, but this pandemic has speeded things up. Things that used to take 5 years to happen are happening in 5 months. That much faster. The retail sales have picked up. Retail sales are on the internet. Are really becoming the big thing. I hardly ever buy anything outside. I buy everything on Amazon or online. So it's amazing. The non-linear change enables entrepreneurship really fast, and that's what's happening here right now.
Yes, you're absolutely right. We've seen an acceleration of digitization across sectors, across industries. Mr. Rekhi, at the start of the pandemic in early 2020, there was a fear, there was trepidation and nervousness on what this would mean as far as the startup ecosystem is concerned. And in many ways, it's actually helped the startup ecosystem because it's brought down burn rates, at least here in India. It's helped with digital adoption. So the black swan event that people were anticipating, it hasn't panned out that way. As we move ahead, what is it that excites you? Where are you likely to believe we're going to really see the engines of innovation revving up?
Yeah. So what happens? What happens is you normally have a flow of things. Things are going as they normally do, and then something like pandemic happens. And all old ways of doing things become obsolete overnight. But life goes on. People still have to buy food. People still have to live. People still are having children. People are still getting married. So they have to find a new way of doing things. And at this stage, the entrepreneurs have the real advantage because they don't have any momentum. They don't have any vested interest in the old ways of doing things. So they find a new way of doing this. The companies, larger companies, normally are slow to change, but the entrepreneurs can jump on a dime. And that's what's happening here. The things that require travel, the things that require gatherings, they are sort out of fashion. Look at what happened to streaming. Look at what happened to Zoom. Zoom has gone from nowhere to becoming one of the largest companies. So I spend half of my day on Zoom because I don't have to drive anywhere. I don't have to travel to India. I mentor people in India from here. It's amazing, right?
Yes, absolutely. You're talking about the explosion that we've seen of applications that have helped us all operate from office, but not in office. You talked about Zoom and so on and so forth. But let me ask you now for your views on what you're seeing happen in India. You've been an investor and a keen observer of the India startup story, and you've had your fair degree of skepticism, especially on the consumer-facing startups and the viability and sustainability of those business models. As things stand today, has your view changed? Has your lens changed?
No, not at all. I dislike the word unicorn. Unicorn is a mythical thing. I like the profitable, fast-growing companies, and somehow it has become fashionable not to become profitable. These are not sustainable entities. How long can you depend upon outside capital? I looked at Ola, I looked at Flipkart, I looked at, I can't find one profitable unicorn in India. Can you name one? So what happens? See, that's the problem. Unicorns give you this false sense of security, false sense of achievement, but they burn tons of cash. A real startup has to become profitable at some reasonable scale, and I don't mean at billions and billions. My company, when I did back in 1987, was very profitable at $10 million of revenue. And by the time we reached $100 million of revenue, we were super profitable. Your model has to click in. And I'm saying at $500 million, your model must click in. Because otherwise you have these bad habits of spending, being inefficient, sort of baked into the company.
Mr. Rekhi, let me now address the issue of what this proliferation of the startup ecosystem means for India as an economy. And we can argue about sustainability and profitability, but there is depth now in this ecosystem today. There is global aspiration in this ecosystem today. And one would argue that that bodes well for India.
Yeah, it's a very good start. That I'll say, India is a country of 1 billion, 2 billion, 3 people, right? In a good economy, 1 to 2% of the population is entrepreneurial. In US, that number is about 2%. So that means we should be having about 25 million entrepreneurs in India, on an ongoing basis. Just imagine, if you end up having that many entrepreneurs and each one hires about 10 people, you can create 250 million jobs in India. India has tried the top-down approach of planning. It has tried the approach of government-owned enterprises. It needs to now turn over to entrepreneurs. It needs to have enabling environments where we can produce millions and millions of entrepreneurs. And every aspect of Indian economy, especially the agriculture sector, which is sort of pretty inefficient and it's almost in a stone age in many ways, needs to be brought to the modern age. Use drip emitter systems. Use the GPS to get the soil analysis done and right planting with right. There's a lot of technology that can help farmers, and entrepreneurs ought to be doing that one. Indian government needs to find a way to make the environment more attractive than it is right now. By the way, US government has done superb job of attracting capital for the entrepreneurs. India is not very competitive.
I want to focus a little bit on what you believe needs to be done to ensure that it is more competitive. We had Mr. Tata. He's, of course, investing in startups as well. But largely, the startup story so far in India has been funded by external capital. And the effort and the hope is that we will finally unlock domestic pools of capital. What will it take, in your view, to actually be able to do that?
So let me tell you, we shouldn't distinguish between foreign and domestic capital. Capital is capital is capital. Is a lifeblood, is a mother's milk for the entrepreneurs. And Indians are used to buying gold. Indians are used to buying land. Indians are used to buying assets, hard assets. It's going to be very hard for them to change overnight. The risk capital is coming from surplus capital around the world. India needs to find a way to attract that money even more while it develops its domestic capital thing. But it shouldn't distinguish between those two. So let me tell you what I told Arun Jaitley when he was the finance minister. In India, if you do back then, this is now laws have changed a little bit. If you do speculation on stock market, there was no capital gain tax on your stock market gain. Sattebaji speculation was tax free. But if you invested in a private company, they tax the hell out of you.
Yeah.
Why is productive investment in a startup is being taxed? Why are the risk capital, which is assuming huge amount of risk to start with, is being discharged by taxes? That's it at the time. Capital gain taxes. 1% of India's revenue are from capital gain taxes. 99% of the problems are from that one. You can discharge the foreign capital. I am not able to invest in India. Huge amount of bureaucratic work. It's just not worth it. In US, they have this called QSBS, Qualified Small Business Scheme, where you invest in a startup. First $10 million of your gains are tax-free. So I invest in my name, my daughter's name, my son's name, my wife's name, and we get $40 million worth of gains tax-free. This is US. They had jobs at JOB Act, where you get companies public, must do all sorts of things tax-free. So I think India needs to become very focused on how do we enable millions and millions of entrepreneurs in India. That's our future. We should bet our life on that one. Anything that creates jobs in India, anything that produces goods and services in India is a good thing to support.
You're absolutely right. And yes, there has been a lot of pain on account of the angel tax. Some of that pain and poison has exited the system, but a lot of it still is a stumbling block, a deterrent, and a hurdle, as you point out, Mr. Rekhi.
I should tell you, we have bureaucrats which are very smart people, but they are not free-thinking entrepreneurs. They're not free-thinking economists. We need to look at the role models, US, to some extent China, but US goes way out of its way to enable its entrepreneurial ecosystem. In India, I give you this tax rate, I give you that tax rate. None of that really means anything. I need to enable, just to give you an example, if I have 1 million entrepreneurs and each one needs $1 million worth of capital, I need $1 trillion worth of new capital just to support them. It's not going to be available in India. I need to attract it from all over the world. I need to incentivize these people to come to India to invest in Indian entrepreneurs. So we should think at that level, how do I get trillions of dollars worth of venture capital into India? And I need to roll out the red carpet. I need to make them feel very welcome, right?
Yeah, you're absolutely right about that. But I want to focus on another theme and pick up on some of the comments that you made. For instance, you talked about the need to focus much more on unshackling agriculture, on developing solutions to actually enable agriculture to modernize. We have many companies trying to address that, but in small, limited ways at this point in time. Now, globally, what we are seeing is this wave of ESG investing. How does India capitalize on that opportunity, especially for sectors like healthcare, the green energy, education, agriculture?
India has opportunities unlimited. we need to encourage entrepreneurs. We need to give them the reasons. We need to get the foreign capital term. And by, we have this nationalist mindset. Somehow the foreign capital is still East India Company. One of my good friend, Sanjeev mentioned of, hey, foreign VCs are like East India Company. I am a foreign VC in India. I don't feel like an East India Company. We should get rid of that complex. We should get rid of that complex. India is not what it was in 18th century. India is a very powerful nuclear power. We should think of ourselves, not as a weak player. We should think of ourselves as a strong player on the world scene. And we need to get growing. We need to raise let the capital come, let them invest, let them enable. By the way, the capital also brings lots of knowledge with it. It's not just the money. A dollar is a dollar is a dollar, but a dollar is only venture capital in the hand of a venture capitalist.
Mr. Rekhi, it's been an absolute pleasure. I would have loved to continue this chat, but unfortunately, we're out of time. We wish you the very best of luck, and thanks so much for joining us here this morning.
Thank you, Shereen. Thank you very much.
Always a pleasure.
What a pleasure to hear from iconic figures like Ratan Tata and Kanwal Rekhi. Thank you, Shereen.